Let's do a bit of a week recap on Dow Jones, S&P, the Nasdaq. We'll also be doing a bit of a week recap on the silver and gold and maybe some other markets as well too. What's the daily chart saying? What's the big picture saying? And what could we expect moving forward? Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. So let's actually start with the Dow Jones. And by the way, if you really enjoy these videos that I've been doing, give me a thumbs up, hit the subscribe button, pound that bell button, click bell buttons and do all that sort of stuff, and put the word in the chat box, I love trading. If you enjoy trading and then also these videos. So that's the Dow Jones. What's going on right now with the Dow Jones? Firstly, I've been saying for the last probably a few days now that there is a warning pattern here, which is a bit of a warning, which is a bit of a, say, like a head and shoulder formation. A lot of people are saying it's a head and shoulder formation. Due to the fact that I've been saying there's a warning pattern here, and due to the fact that I believe a lot of people are seeing this as one big massive topping pattern, it makes me think the opposite is going to happen. Now, technically wise, we haven't broken down, we haven't broken out yet. And what I mean by that is this: whenever we get a bear flag like this here, we've got a nice little bear flag like that. Once we break down, then we measure from the high to the low, we project that down, and that's where it's likely to go. So if we look at this situation on the Dow Jones, we measure from the low to there, and we project that out, and we're probably likely to get down to around about somewhere at the 2600 level if we do break out. So we don't know if it's going to break out or not. So let's actually erase everything off the screen there. So I say that that's a head and shoulder formation. And if you want to take the head and shoulder formation projection, what you do is you find the neckline on any head and shoulder. There we go, from there to there. And if we start to break below this neckline here, well, we measure from the head down to the neckline, like so. And let's actually project this down. And guys, in that free trading course I'm giving away, very first thing in the description, I talk a lot about this. There's actually 2 or 3 videos talking about chart reading techniques and so on and so forth. So make sure you grab that free trading course, link in the description, or go to johnsfreegift.com. So you can see how I just projected that down and smack bang there. So what a coincidence, right? The projection point that I did happens to be this support level. Coincidence? I think not. So the better you can read the chart, the better trader you'll be. That's why I really focus a lot on 2 or 3 videos giving you some really good techniques, not only trading systems in that free trading course. But we can see we can see that the projection point came down to 26,000 through there. So if we do start to break below 27,500, we're probably likely to get down to 26,000. But what happens after that? See, here's the really interesting thing. If I go to my weekly charts, I can see that we have made a big move down and a big move up. So this is what you call a V bottom. So there is every chance that if we do start to see a bit of a selling period right here, it's probably likely to be short-lived, and the Fed's probably going to come back in and scoop it up and take it to the upside. Now that's what I think. Okay, now if you don't think the market's going to pull back at all, come on now, let's actually be real here, right? The market's pull back all the time. So don't be, look what's happened in the last week. We got a little pullback. So if we do get a bit of a pullback over here, let me take all that off the screen and let me do a Fibonacci from the low point to the absolute major high point. And we can see that if we do get a bit of a pullback, 2600, maybe even down to around that sort of 25,000 level, or 25,000 is going to be a major support level in the markets, and we are creating a big V bottom here. So what tends to happen when you get this? You tend to get you either get 2 situations through here. A lot of the times you'll see the market go down through here, it'll rally back up to around about the 50% level through there, and then we'll start to roll over. If we get that, then we're probably likely to head back down to the lows through here. In fact, this setup right here, I'm actually going to trade right now that has this setup on the weekly charts. And guess what's happening? We're starting to roll over right now. It's a bearish trade. Anyway, but because we didn't do that right, what happened? We actually broke back up and we broke above this. We broke above the Fibonacci level. So if I was doing the Fibonacci from the high down to the low, I would measure from the high point down to the low point. And as you can see, if I open up my charts, you can see how that this Fibonacci 50% fib level held it really. We had a lot of problems through that Fibonacci levels. Now, I don't know why this happens, guys. It just does happen. And so if we did hold through there and then we started to do this, guess what? Now we're looking for that double dip, right? You know, a lot of people were looking for the double dip, which most of the times it does in the markets. But we didn't get the double dip. We kept moving up. And not only did we break up, we actually broke well above the 60% level. Now, what does that mean? That means now momentum is not strong on the downside. So once we can see that, now we can actually start to see, okay, we're not getting a lot of momentum, but look what happened through here. Not only did we not break above, but we came down, and now this is a weekly bars. We found a lot of support all through these weeks, and now we're starting to head back to the upside. So if I take everything off the screen again, let's remove the Fibonacci. Let's go back down from the low point once again to the absolute high point where we are now. If we do start to see a bit of a drop, it's probably only going to be short-lived. I don't believe we're going to see a big, massive crash, but it's not what people think. And most people won't see this. When the market does start to go out, you're probably going to get a lot of videos, including myself, saying, market's crashing, okay? And then grab your attention so you can click on the video. Then I'm going to tell you the truth about what's going on. So we can see that. Now moving on through to the S&P 500, same sort of thing. If I look at the S&P 500, let me take this off the screen and this off the screen. You can see the S&P 500 made a lot of rejection at this point through here, which is my three major levels, as you can see. And now we're actually very, very, very high through here. So I don't believe we're likely to make a very big move up or a very big move down. We might get a bit of a pullback, but I believe we're likely to go sideways overall until the election happens, and then it's going to decide what it wants to do. But for now, we have continued to make a very big move up, and now we're getting a bit of a pullback, and you can see what's happening through here. We're just slowly getting a bit of a pullback. So looking at the S&P 500, and this is where it's getting very, very tricky, because the S&P 500 is not creating that bear flag formation. We're actually slowly going down. Remember, a bear flag looks like this. This here is like this. It's like slowly going down. That's not actually bearish. That's actually a bullish pattern overall. So if we look at the Fibonacci levels, if we go from the absolute low point, from this low point through to here, and we measure from the absolute high point, look where we are at right now. We actually bounced off today. We bounced off, to make sure it's right at that low point. We bounced off today that 50% Fibonacci level. Now, if this 50% Fibonacci level holds and we start to get back, get back above the 3,400 level, then we could be getting ready to go for another move to the upside. So, but once we start to break below the say the 3,200 level, then I'll probably see a move down towards the 3,000 level through there. And also the same for the Nasdaq. Look at the Nasdaq. We're actually slowly going down. So maybe this is just a little bit of a sideways movement. Because once again, guys, most people are seeing the heads and shoulders, which makes me think that the head and shoulder formation is probably going to be a continuation pattern more than a reversal. See, a lot of people think, oh, look, we have a shoulder, a head, a shoulder. That's a reversal. We should start to see downward move from here. What you'll see a lot of the times, they'll give you head and shoulder formation. Most people will actually see it as that. Think, oh my goodness, it's a bearish head and shoulder. It's going to drop. And then the market does that. I've actually traded that probably half a dozen times. And I must say, guys, probably five out of the say half a dozen times, 5 out of the 6 times, it did exactly this. It continued up. One thing I realized is that it's not a head and shoulder until we actually break down below these support levels. So that's what I'm seeing through there and also the Nasdaq as well too. Nasdaq is just slowly going back. So I believe that we're probably likely to get a bit more of a pullback in the Nasdaq, but maybe just a bit more time before we start to see possibly even another move to the upside, especially with the Fed, with what they're doing right now. Moving on now through to silver and gold. And as we can see, once again, not much going on with gold as we speak. Really just a sideways phase. Not really much going on. Continue to build time, which again, this was expected because we had such a big move up. We're now building time. Well, we're now just going sideways, which is an energy building phase. And we are probably likely to start to see a breakout real soon to go for another move up. And same for silver as well too. Silver's doing the same thing, just going sideways. Why? Because the market's tired. People, this is what happens with the markets. If the market has a big move up like it did here, guess what happens? The market gets tired and it wants to start to rest for a while, and then it does this, right? It's like you go into the gym. You use a lot of energy at the gym, like I did this morning. I burnt like, what was that, 600 and something calories, almost 700 calories this morning in an hour session. So I did that, right? So I'm absolutely exhausted right now. So lots of water, lots of bananas, and and stuff like that. And then I'll be ready to go again very, very, very shortly. Probably in a few hours from now of doing this recording, I'm probably going to go to the gym and do leg day. Okay, so I'm going to do a really high intense cardio workout. Okay, have a bit of rest, and now I'm going to go do leg day. But that situation, that'll be like, big massive workout, and then a little rest for a few hours, and then it's leg day. And then I'm probably going to take tomorrow off and really have a big rest and then go back again. So you see how that works. So that's what I'm saying through there, guys. Once again, if you enjoyed this video, then give it a thumbs up, click the subscribe button, hit the like button, and all that sort of stuff. And once again, guys, make sure you grab that free trading course below. It's really, really, really going to help you when it comes to all the different things. It's about 7 or 8 videos long teaching from the foundations, like the bullseye method. You're going to absolutely love that. To 3 chart reading strategies, to trading systems, and so much more. And if you'd like to get more help from me, then there should be something that's on the screen right now. Click on one of those videos to go get more education right now, and I'll see you in the next video.